Welcome to The Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we have Joe LaFleur, founder of 100 Units. Hands down, Joe is the broker you want to know if you're buying deals up to 100 units in Central Florida. Welcome to the show, Joe.
Thanks. We're ready to go.
All right. Well, it's great to hear you, or great to have you here today. I just looked up your booking info, and you said you were looking forward to a fun discussion.
That's right. Yeah. What else?
Same here.
Let's go.
Fun and exciting. Action-packed interview. So you're definitely going to want to stay to the end because today we're going to discuss economics, the housing market, demographic trends, and how to get brokers to send you more deals. We're also going to talk about mindset. And I want to say, Joe, you are one of the people that I look up to when it comes to mindset. By the way, I see you put a focus on providing value to others, positive attitude, and a strong work ethic. So we're definitely going to talk about some tips and tricks to supercharge your success.
Yeah, exciting. I go with that old school. If you help enough other people get what they want, you can get what you want.
Absolutely. I love it. Total classic. So now with all that positivity, here's the ominous introduction I prepared for today's show. So,
okay, yay, some ominous, dun, dun, dun.
Ominous music. Cue the ominous music. Okay, so I'd like to start by briefly setting the stage as we record this show on the 17th of November, 2022. Interest rates are higher than they've been in 20 years. Inflation is raging at rates not seen since the 1970s, and the housing crisis rages on with builders millions of units beyond replacement. And yet, deals are still getting done. So what would you say to investors that are laying back and waiting for the blood in the water?
Go play golf, take a vacation, go drink a beer on a beach, drink a pina colada. That's what I would tell them. Because either people are interested in doing deals or they're not. And you ain't nothing you're going to tell them, ain't nothing I'm going to tell them. That's one thing I have found out over many years of experience. A man convinced against his will is of the same opinion still. And just, I learned that it took me a long time of arguing with people to realize, no, unless they're already on that path and need some help, that's where you can help. Don't waste too much time trying to sell somebody something they ain't buying. Say, oh man, that's awesome. You don't want to buy right now? Oh, that's probably a great decision for you. Thanks. Next.
Yeah, 100%. I see this is going to be a very quotable episode. I'm looking forward to seeing the clips. So, yeah, I just love it. I want to say that before the show, you confirmed that nothing was off topic. So let's let it rip. So sometimes I do put together a little presentation, and I thought, let's just see how this goes. I'm going to share my screen here. And before that, I think I better put up on my screen my big old presentation. And there's two reasons I'm doing this. One is that I know that you've got some amazing ideas, and we're going to benefit a lot from you. But also, I give presentations on housing economics. So who knows, maybe some of the things that you say today are going to be some of the same things I say in about a week from now.
Exciting. All right.
All right. Awesome. So
Sun Tzu, yeah. There we go.
Hey, can you see my face here? Is this working?
I can.
Yeah, all right, awesome.
I can also see Sun Tzu. Man, I love it.
Oh, whoa. Okay, I see. Yeah, that means we're on the wrong screen. Oh, that's silly.
Wait, that's awesome. Sun Tzu.
We're going to talk about
the art of war. Come on.
We're going to talk about Sun Tzu in a minute. I promise. Good. Yeah, another eminently quotable person.
I'll give you. So Sun Tzu had one of the best things I have ever heard. It said, no empire can survive a protracted foreign war. And that's something I've always remembered.
Yeah, something definitely to remember, something to give us pause. All right, awesome. Do you see my big fat face on the screen right now?
I see a thing that I assume is a caricature.
A caricature, yes.
A caricature? Caricature? Yeah, whatever, yeah.
Yes, that is my caricature right here.
Nice.
And boom. So yeah.
Oh, even with the bling,
a little gleam
in your teeth. There we go.
So that's to go along with my nickname, Georges. So I thought I'd just put that out there. So I promised I'd show some graphics that were made by somebody professional. I was telling in the off-screen portion of this that I'd actually made the graphics for the Foundry. But anyway, yeah, let's talk about demographics. So one of the things that's on my mind is Central Florida. This is a place where I transact. I bought a deal from you recently, and I just love this place. I mean, depending on how you define Central Florida, I mean, we have as many as 1,100 people moving there every week. So what do you really think about Central Florida? Where are people moving? And are these trends going to continue?
So where are people moving? The answer is yes. The answer is not where. The answer is where they're not moving. You can't find a market in the greater Florida area where there is not significant population growth and significant job growth. You randomly throw a dart and you're going to hit some place where rents are going up right now. It's absolutely astonishing. One of the big drivers for investors right now, you gave off all the ominous statistics, interest rates, inflation, blah, blah, blah. You can be the best operator with incredible skill set and do okay in a declining market. You can be an average operator and do very well in a incredibly fast growing market. It leaves you a lot of room for error to invest in Central Florida because there is massive population and job growth. But you're just basically hopping on a wave of the macroeconomics here. And barring some massive, event, I don't see anything that's about to slow down the population growth here. I actually think it's going to get more going forward.
Yeah, I love it. I completely concur. I think Florida is great for business. People that didn't like those COVID restrictions, people that just want to move around, people that love the weather. I mean, there are 100 reasons to move to Florida. I mean, that's one of the reasons why I buy apartments in Florida. It's nice to have a business trip that you don't mind taking. Now, let me highlight a couple places here, like Ocala and the Villages. Now, these are places that I think of in terms of some explosive growth. They may be some smaller, less populated areas now, but if you look at the relative change, I mean, these places are going like crazy. If you look at the demographic projections, I mean, Ocala is supposed to grow just by leaps and bounds over the next 10 or 20 years. Do you think that's sustainable, or do you think we're going to kind of level off or slow down in that growth in these areas?
I do not. I mean, if you drive through there, you drive up and down like the turnpike heading toward 75, you will see is about 2 miles of solid construction across where the Villages is. If you drive you get up to Ocala right there, you've got the World Equestrian Center, which they just built, which is absolutely stunning facility. And you have massive growth. You also have a number of large distribution centers being put in right there on the I-75 corridor along Ocala, which is going to bring really an incredible amount of job growth, which drives population growth. And it's interesting, you're talking about the Ocala Villages market, and you didn't even mention Winter Haven and Lakeland, which is another incredibly fast growing market, dead center between Tampa and Orlando.
Yeah, I would have to say, if we were going to talk about another one, that would be one that I would love to talk about because, I've always felt, and obviously influenced by Neil Bawa here, that you want to go for the path of progress, right? And that I-4 corridor, it's just amazing. And everything, I would say, from Daytona to Tampa is growing like nuts. But between Orlando and Tampa, it's growing super, super amazing. And you don't have some of the barriers to entry. I know that it seems like even maybe 18 months ago in Tampa, you might have to put down money day one. Your money may go hard day one. That's a hard market to break into. But some of these markets in between.
Just step up.
Well,
hard about that?
For you to say, John, you're at the top of your game,
if you're going to close,
people,
it doesn't matter.
Well, there you go. Hey, look, if it's the right deal and you know what you're doing, I would say absolutely. But I might suggest personally, for those that want a gentler on-ramp, that areas like, Lakeland, Winter Haven might provide a little bit of a gentler approach, but you still have those great demographic tailwinds out there.
You basically anywhere in Florida. I mean, we've got 3 of the top 5 metros in the United States for rent growth. I mean,
gotta love
throw
it.
a dart and pick someplace.
Yeah, we should probably do that. I bet you could talk about any of the cities here. But yeah, absolutely. Love Central Florida. Any other areas you want to discuss? Or maybe we'll just throw that proverbial dart and we'll just take one at random.
Pick wherever you want. I would say one of those interesting things people think is like, one of the best career moves I made was actually doing this business in Central Florida. Because if you take the skill set I bring and my abilities and move me into Cleveland, my business is not half what it is here, because of the exact same reasons that multifamily owners and investors have done so well here.
Right. Because it's growing and you've got that drive, that ambition. And obviously you attract people who have that same mindset. Good. Well, how about this? Maybe we could pivot just a little bit. When I say that one of the things I love about you, Joe, is you are direct, right? You let people know exactly what to expect. So for all of the amazing investors out there that would love to build a relationship with you, what would you say? What is the best way to do that?
Make an offer that's good, show proof of funds, and then close.
I like that. Totally direct. So it's not like send me feedback, take me out to coffee. My time's worth about $2, right? That's not the way to get on Joe's good side.
No, I have heard that from so many podcasts and gurus out there telling new investors to call up a broker and take them to coffee and like, why don't you close? Like, there's an idea.
So I love it. Yeah, totally direct. You always know where you stand with Joe. And I say that is a good trait. So yeah, by the way, though, when you do call up Joe with that offer, make sure to mention how you loved his appearance on the Foundry, though. He'll appreciate that.
That's right.
All right, awesome. Well, how about this? I've got some great statistics today. And again, this is November 17th as we record this. And here you have your Census Bureau, HUD stats, and you can see like, whoa, look at the completions, right? We are struggling to get up to 1.5 million, which again, our audience, I hope you know by now, we talk a lot about housing stats. 1.5 million, that's really replacement rate, right? And you can't see a single point in the last few years. And literally you could cast this back to August of 2007, and you wouldn't see a single point at which completions exceeded 1.5 million. So we have a genuine crisis. Obviously, this is one of the tailwinds that's pushing single family and multifamily prices up. But what do you think about what's going on in the building scene? I mean, the builders that are just not building, what's going on?
Because let's be real, that they don't make money building, they make money selling the real estate afterward. And if it's not profitable, if you're going to take on 2 years worth of risk, development costs, go through all the construction, and you don't see a clear path to profitability, you're not going to do it. Like this is the same thing here in Orange County. Like we just had on the ballot was a rent stabilization act. So we were talking the county commissioners, they put on the ballot, they're coming out, oh, we need to help add affordable workforce housing because the rent growth is too high. If you have 1,100 people a week moving, if you have actually it's almost 900, just under 1,000 people a day moving into Central Florida. If you have that many people moving in, there's no way you're building that many units. If it takes 2 years to go through process, to go permitting, land use, zoning, then go construction, like if you have way more people coming in and not enough supply, the price goes up. That's what happens.
Right, 100%. I'm glad you opened the can of worms on rent control and affordable housing. I mean, I can give you my perspective. My family is in the building business. We're building a 12-unit subdivision out in Troy, Michigan. And I tell you, it is huge risk. And it's no small wonder that we're building homes for rich people because, look, that's who can pay. And if we get all stretched out and funding dries up, now for us, we're self-funded, so that can't happen to us. But people who are out there on bridge loans, construction loans, if you're floating above prime, you don't know what's going to happen. You don't know what's going to happen with lumber, and you got to have some high margins to work with. And that's literally the only way to get people in there. So thanks for being that voice of reason. And also mentioning the delays. I got to tell you, being in the building business, time is money. I mean, we must have spent at least 2 years working with the city we love, the city of progress. And but I got to tell you, though, that time is money. And if you got to wait a couple of years to get the shovel in the ground, that really makes it difficult. And of course, we went for a cluster development. So we were really going for the brass ring, and we got it. but it took the time, and then there you go. But then you got to make the money back because you got to be able to charge. And obviously, you alluded to it, but are builders building houses for the workforce?
I don't even know if you could actually build one that would be affordable to the whatever under 50% median income. I'm not sure you could actually build a house today for that price.
I don't know how we do it other than
land
build
costs,
to rent.
development costs, labor, lumber, construction, shingles, roofing, windows, material. Like I don't think you could do it.
Yeah, 100%. And I wouldn't try, right? I'd be
And if
very
you
frightened
did,
to
the
see what would
margin
happen.
is so thin, you should have just gone and taken your money and bought some treasuries and went to take a nap.
Oh yeah, I love it. Yeah. Okay, sounds like maybe we'll be discussing risk premia later on, because things are getting kind of thin out there with the cap rates, right? So there you go. What would you say to that? I mean, when you see cap rates, maybe not much above where treasuries are at, like, well, why should you buy multifamily, or where should these? What do you think a healthy risk
You were
premium
waiting
looks
to
like?
hit one of my hot buttons. So cap rate is one of the most malleable of metrics. The only one that's more malleable is IRR. Like, you want a number that's made up. That's it. There's so many assumptions that go into IRR and cap rate and cash on cash return, not even alluded to. They're just this number. Oh, this is the cap rate on this deal. Like, I've seen a deal underwritten. You could do it 2 ways. One, it was a 12 cap. One, it was a 2 cap. Same deal, same everything. Just how it was underwritten. And in the universe that I play in, so this is 5 to 150 units, mom and pop deals, there is no uniformity of underwriting. This is not institutional players here where you have audited financials. And that's one of the large that if you're going to walk away from something and you're a relatively new investor or someone who's looking out of the area, and you look at a cap rate and say, oh, this one's a 4 cap, this one's a 6 cap, they could be the same deal because the underwriting is not standardized. So if you have one broker who takes the income statement from an owner, I've seen income statements where they're like, oh, the cap rate is 4.2. You open it up, you look, they've got debt service in it. They got the guy's vacation home. They've got car. Like, you're like, no wonder this thing. And you got other ones where you look at it, you're like, income. They've got monthly rent times 14. And then they've got expenses that include property taxes. And then there's your NOI.
Right.
So I would caution anyone who's looking at apartment deals that are in this space to take any underwriting and make sure they're doing their own.
100%.
I wouldn't even look at what a cap rate, schmap rate. What's the rent?
Well, if you don't mind, I'll give you my own hot take on cap rate here. So, like, we look at cap rate as the driver of price, right? So many people talk about it as if it is, but it's the result of so many things, right?
Yes, it is a real. That's one thing I would say. If you're going to spend time as a buyer looking into buying real estate, I really like your ideas. First, you pick the market, then you pick the sub-market and become an expert in those. The specific property is you have much more control of it. You can paint the building, do the renovations. There's nothing you can do to move it. There's nothing you can do. So if you pick the market right, you pick the sub-market correctly, you can affect the building. And if you're doing that, you should know what the rent should be. You don't need to have somebody tell you about it. If you're not sure what the rent should be, I would be very hesitant pulling the trigger unless I felt very confident on that top line number. After that, an apartment building, there's not a huge variance. There's real estate taxes, insurance, there's repairs and maintenance, you got leasing fees, this is utility cost. If you're a really good operator, you do a little bit better. If you're a terrible operator, you do worse. But if you get the top line number right, you're going to do all right in that investment.
Yeah, I couldn't agree with you more. And I don't know why there aren't more people talking about rent comps and where rent should be in terms of underwriting deals. I see a lot of people seem to think, Underwriting means, well, I put a bunch of numbers in the spreadsheet and I got these from the broker, and so they must be true. And we know that the seller never lies, right? So, I put all these numbers in the spreadsheet. I've underwritten the deal, but I'd have to say that without a doubt, especially in today's tight markets, I'm really only interested in places where I think that I can raise the rents, because otherwise, how in the world are you going to make it work?
Yeah, you should be extremely confident in your numbers on where you can take the rents. And if you're confident on that and you know what you're doing, the rest of it, it's a matter of operating. You can operate somewhat better than someone else. What's amazing is in the space we play in, the difference between a good operator and a lousy one is usually 10% on the top line number, sometimes 20, but that's 40 to 50% on the net income between those two. It has a significantly oversized effect on what you actually put in your pocket.
I like that. That's the way I look at it as well, because look, if you can raise the rent, that's really gravy. When you raise the rent, that doesn't raise your expenses at all. Your expenses will be what they will be. It's like Doris Day, right? What will be, and you can't change that. But you raise the rent $100, that's $100 in your pocket every month.
Yeah, it drops directly to your bottom line. Like your debt service doesn't change. Like usually that's your single largest check you write every month as an owner is your debt service. That stayed exactly the same. Your utility bills roughly stayed the same. Your taxes stayed exactly the same. Your insurance stayed exactly the same. Your management fee stayed, maybe it moved a little, but you increase your rents to put money directly in your pocket. And the thing with it that a lot of people discount, let's say you go and you start raising pet rent and you start charging pet rent, which is whatever, 25, 30 bucks a month. That's not much. That's thousands of dollars of value you've created.
Yeah. Love it. Love it. These are great insights. Ladies and gentlemen, I swear, Joe could have just saved you like $100,000 here, $1 million. Don't screw up on your next deal. You need to take these things into account. But cap rate, I'd like to talk just a little bit more about that, because people talk about like the cap rate of the building. Like it's one thing, but you've got so many different cap rates. Just off the top of my head, you've got the current operating cap rate, the seller's cap rate. You've got your going in cap rate. You've got your stabilized cap rate. And these are all going to be very different things.
It's highly likely that they are going to be very different. And you're not even talking about who's underwriting it.
Yeah, for those of you listening, you can't see the wry grin on Joe's face when he says there, it's highly likely that there's a difference here. Totally different things. Yeah, good stuff. Well, how about this? Look, you mentioned Sun Tzu. So I say that's amazing. I love people who know Sun Tzu. I got to say if he was a building operator, I think I'd say that he was probably one of the very best, or would be one of the very, very best. But I've got a lot of stuff here that if you wouldn't mind, like just walk us through, like here, I'm gonna hit the screen share again. Boom. And here we are back in TV land. So what are you thinking in terms of where things are going? People talk and they use the word crash loosely. My definition of a crash, like we better see at least like a 20% decline, right? 2008, that was a total real estate crash. And here I'm just looking at single family numbers here, just because it's much easier to find statistics on single family. I look at economics as the study of scarce resources with alternative uses. So clearly what happens in single family is going to impact us to some degree. But like everything is different here in my mind. Now, when you look at this, what would you say? What we're going through right now, similar to, somewhat like, or completely different than 2008?
First of all, you hit on a lovely point for me. That's when I got into real estate, was in 07 and 08, because I'm a genius. Everybody else is running for the doors out the brokerage business, going back and being like, dude, I'm out of here. You can't possibly sell anything. And here's Joe. I'm super smart. I can do it. So it turned out to be a really good thing. It just, for a couple of years, man, it was a tough road for a while. As far as today versus then, they're not even remote. I think this is going to be a completely different experience. You've got massive, I mean, if you look back at the 70s, you look back at stagflation, one of the things that that actually performed well during that time period was real estate. And one of the reasons is you've got rent growth, you've got inflation happening, which actually helps owners of multifamily properties. The big driver right now, the only reason that prices are not continuing to appreciate, and they're actually pulling back in most markets across the US that I follow, is that we have taken interest rates and driven them up by, I mean, you could easily say double, and it might be more than that at this point, actually, if you went back 2 years. And that has a negative dampening effect, and it's doing exactly what the Fed has intended it to do. It's pulled back asset prices. But as far as anything that would drop, I have not seen that at all. And that's one of the things, I've had a lot of pushback from buyers, like, oh, this property needs to be, the price needs to come down because the interest rate has gone up significantly over the last 12 months. And I have the same retort. It's like, I totally agree with you. But on the opposite side of this coin is the owner of the building who's selling it. He's making more cash flow on this building than ever in his history. You think his motivation to sell it at a lower price has gone up? I don't think so. They're putting more money in his pocket than ever.
Yeah, 100%. And there's also the issue of other types of buyers, right? If you're coming in with a syndication, you have one set of return requirements. If you're just kind of parking your money because you want to fight inflation or because you have a busted 1031, that's another. If you come from someplace in the world where you've got negative interest rates, some of the things that investors would scoff at might look pretty darn good. So you've got to fight against them too. I mean, somewhere out there, there's a buyer at that price if they're willing to look, if they hold out.
We've also got one more going on right now. We're in November till December 31st. We got 100% bonus depreciation. So if you are in a situation where you have a tax liability coming due, and I mean, you know where you're at. We're in November. You know, if you made a bunch of money and you're going to owe a huge tax bill, you can go out and get 100% bonus depreciation, do a cost segregation study, and get back 50 to 60% of your down payment on a building, which is astonishing. If you wait till January 1, you're going to be doing 80% bonus depreciation, which is still insanely good.
Still insanely good, I'll say, because I mean, I'll take 80%. I mean, that's pretty amazing. I mean, to get all that back, your CapEx, et cetera. I mean, boom, that first year, you've got, you're going to carry it forward. I guarantee. I don't know what else you're doing, but I'll be surprised if someone comes back to me. I'm not here to deliver tax or legal advice, but so George, you know what, man, I didn't get enough with all my CapEx and bonus depreciation. No, it just didn't work for me. It's amazing. It's like magic. Well, how about here? One more wild card though. One of the things that has changed though is our interest rates, and there is a huge difference. I mean, there is a huge difference between where interest rates have gone this time versus last time. So yeah, I mean, if you're looking out there and you see like last time, what was it, like 6.8 to 3.9% versus we went from record low interest rates like 2.65, and last I checked, and again, this is single family. I'm looking at the
single
Freddie
family.
Mac
Yeah,
primary.
right now, multifamily deals are in this low sixes, or like basically
Right.
100 basis points less than that, give or take.
Exactly, and I think that is fair to point out. I mean, we are clearly playing a different game out there, but I don't expect that spread to last for long. Don't know what's going to happen next, but again, I mean, oh boy, I mean, if those prices start to drop, and my concern is that if single family landlords can do what we're doing for cheaper, obviously I would rent a single family home before I would rent an apartment. I mean, unless it's Class A and that's what I'm looking for, but boom, I mean, that definitely sets a ceiling above our heads.
I would be less concerned about that, because the vast majority of people who move out of a house, the vast majority need the equity to purchase their next house. And so it's difficult to hold on to it. So if you end up with a situation where they can hold on to it, which is great for them, that means they had plenty of money to go purchase their next house. But the vast majority of them need that equity. I mean, if you look up the statistics on the average person, the median, not average, but median 65-year-old in the United States is worth like $280,000, and that includes their house. If they are a renter, their net worth, the average net worth of the median, not average, because the average includes, Elon Musk and Jeff Bezos. But if you exclude those guys and take the median, you're like $6,000.
That is crazy. And again, yeah, hard to square those statistics. I mean, with the fact that we have more millionaires now than ever in America. And I swear at least half of them have to be like 60 years or older. And yet, yeah, the median is kind of sad. So, oh boy, I wish, I don't know, I wish podcasts like this could get out there to the world and make everybody financially savvy, and that everybody has like the drive of Joe LaFleur and start a business that's going to make you rich. Join the ranks of the millionaires, but it's not easy.
That's an excellent point. It ain't easy. I would say it's also there also has to be, so there's a certain amount of luck involved also. And to discount that and pretend like there's no external factors, I think is to discount something that's a reality. Because you have health, you got location, you've got a number of family situations that can turn things one way or the other.
Yeah, 100%. I agree. You cannot can't discount health, not at all. So without a doubt, it's not to in any way impugn the integrity of people who are not doing amazing in the financial space. But there certainly is, I would say, a lot more opportunity than is being taken advantage of, and certainly hope that podcasts like this help to get people out there. All right, how about this? I can't help it. One last one. Let's just take a look at how quickly these interest rates have been going up. And this is just the Fed rate hikes, and it influences what's going on in multifamily, et cetera. But I mean, just look at that here in blue, like this cycle. I mean, nobody has ever gone this far from the first hike this fast, literally ever. And I mean, for me, this is a little bit of a wild card, but it sounds like you're not yet worried about interest rates. I mean, again, people will just hold on. I mean, I got to say, I'm in the same boat myself. I got things that I may not be able to refinance right now or sell like I'd like to, but you know what? If you got the cash flow, you can hold on 2 years. We may have a completely different game going. But anyway, your thoughts?
Well, let's say you're also in a situation where you're holding interest rates go up. I think they're going to go up again. I think the December meeting, I have every reason to think that the Fed's going to raise interest rates again. That would not surprise me for 1 second. And I have every thought that the lenders today that are lending in the low sixes, they have that idea as well, and they're baking that into those interest rates. Because I haven't seen the interest rates from the lenders jumping anywhere near as fast as the Fed has, because they got way smarter economists than me looking out in the future saying, hey, this is what is the most probable outcome. And if you're an owner of a multifamily property and you're able to continue to increase rents, just to give you an idea. So third quarter, we did a third quarter update, rent growth for the Central Florida markets, 9.4%.
Yeah,
which is terrible compared to the 24.3% it was in Q1. It's still 9.4%. Think about your top line growth. How many businesses would kill to have top line growth at 9.4%? And that's if you're just dead average.
Right. Yeah. What if you're creative and you've got a vision?
If you're driving, you have a good marketing, you're providing value to your residents, and your cost of capital, whatever that number was, if you have fixed debt for 5-6 years, you're just continuing to increase your cash flow from that asset as an owner.
Yeah, 100%.
If you, on the other hand, if you were feeling extra feisty 2 years ago and you said no cap floating debt, let's roll that dice, you're in a different situation.
Yeah, 100%. There are exceptions. People who do have, bridge loans, for example, they may be hurting. There could be some opportunities. So certainly there will be transactions for people out there. I don't see the market totally freezing up, and I don't suppose you do either.
At the moment, I do not see it. You give me so we did our report, transaction velocity, number of deals closed in Central Florida, and the market we follow was down 55% in Central Florida. Over in the Tampa Bay market, it was down 71%. So number of deals closed, just to give you what's happening at this exact moment. And I have a feeling that is going to last for another 6 to 9 months. That kind of really slowed down. Now, if you invert that, you also have to look at 2021 was record-breaking transactions. So if we're down 50 from the all-time high, like you're basically coming back, the old reversion to the mean is basically taking place.
Right. Yeah. You don't want that old baseline neglect. I mean, we got to remember we've lived through some pretty amazing times. So, I mean, when you say, gosh, I mean, it sucks to have 9% rent growth compared to 22, right? It beats the hell out of like 4, 5, 6, 7 that we might have been satisfied with in the past.
Yeah. So anyway, I said more adventures.
Yeah, well, exactly. So yeah, obviously some people are going to get washed out. And just like you came into the business probably at the worst time, but look, you survived, and the people who are able to come in now and to make things happen, obviously they're going to be set up to fully enjoy all of those opportunities at the trough. So since you mentioned you like Sun Tzu, my favorite quote from him would be, where there is opportunity or where there's chaos, there is opportunity. So there you go. Yeah, exactly. That's how I start my economic speeches.
There's opportunity.
Exactly. Yeah. I say we're talking about investing in uncertain times today. And according to one of our favorite warriors here, Sun Tzu, where there is chaos, there is opportunity. So let's figure out how to make the best move we can. Yeah, awesome. So then I think probably we need to pivot, because this is one of those interviews where I have to look at the clock, because I feel like we're like 15 minutes into it, but you've actually given me like 40 minutes already. So we're going to talk a little bit about mindset. So I got to say, obviously you're one of those high intensity people, and you built an amazing team around you. So what is your trick to build that sort of high intensity, high performance environment and still make sure that it's fun?
Have fun.
Just be fun, right? Just
Why
don't
not?
be lame.
Like, people are like, so, live. If you're miserable, like I've talked to a number of people, and they just hate going to work. They're miserable. My recommendation, quit. Like, you spend way too much of your life doing something to be miserable. No, go do something else.
Or go golf.
Yeah, go whatever. Go, like, just, I've seen it in brokerage. I don't know, it makes no sense to me. Come into an office and then like goof around pretending to work. I'm like, you're not getting paid a salary. You're a broker. You're on straight commission. If you're not working, what do you want to hang in some office for? You make the same amount of money if you're on the beach swinging in a hammock. Why? It doesn't make any sense to me. So you might as well have a great time. If you don't, go do something that's having a good time. And yeah, if you're miserable at your job, I highly recommend you immediately get your resume. There's too many people hiring you. Way too many.
Yeah, true. I mean, I do see all those help wanted signs. Again, a lot of that's in the service industry, but I know that people have jobs to fill right now. So sage advice, yeah, we got to be here. So we might as well do something amazing, right?
Well, it's also just being cognizant that you have a choice. Like, that's
true, and people don't feel like that, right?
You read through, that was Stephen Covey's thing of the, I forget whichever one of the habits it was, but it was like there's a gap between stimulus and response. Mm-hmm. And that's your ability to make a decision. It's not stimulus response direct. Because you're a person, you have the right to make a decision between there. So you can stop and say, hey, you know what? I really don't like how this is working out. I can go do something else.
Yeah. Awesome stuff. Deep too, really, because I think a lot of people, if you're in debt, it doesn't feel that way. So maybe you got to get out of debt a little bit. Maybe you have to get your economic and financial house in order. But then I think you're going to feel that opportunity a whole lot differently once you do that. But anyway, before we leave the topic of fun, I would say you have some amazing parties. Okay, so I want to say you think of everything. I went to one of your parties and I even got an impromptu salsa lesson. So yeah, I hope I didn't drink too much, because I definitely want to come back to the next one. So
come on,
you definitely know how to keep things fun. So so kudos to that. I think that's something I see from all high performers. I don't know many high performers that I'd say, what, this guy's a real bump on the log, really boring to talk to, not a whole lot of personality. That's just not the way it is. People that are great at something They do tend to love it. I mean, isn't it just terribly difficult to be great at something that you don't like?
I'm confident there is somebody out there who is exactly that way.
Okay, we're gonna find him. We're
I
gonna
don't
go
know who
find
they are,
Herb.
but I'm sure they're out there somewhere.
We're gonna find Herb, who never had a what is it, a Whopper? But yeah, it's not easy to find. All right. So look, I think that we promised our audience here we'd give you some mindset tips. So I know that you said 3 things to know about Joe. You have a focus on adding value to others, a positive attitude, strong work ethic, but you didn't need to tell me that. I can see these things. So what are some of your tricks? Like, what do you do to keep up that intensity to make every day awesome?
I don't have any tricks. They're just basic principles that are applied across the board. And I would say, number one, you better keep physically active. So it's one of those things. I start the morning every morning doing running, doing workout, something to get physical and then also drink plenty of water on that side to stay energized and keep going. And that would be one thing. The other thing is just, if you're enjoying what you're doing because you made a decision that's what you chose, you're in a much better position to have a good time, to bring energy, to know that that's part of your aura. And to me, it's much more about being cognizant of what you're doing. And if you're not, make the cognizant, you have the choice. You are able to choose a different outcome and go do that instead.
Perfect. And if you hadn't mentioned physical fitness, I was going to ask you, because obviously you're a guy who works out, and I don't know anybody who is full of energy that doesn't love to exercise. That is huge.
I didn't say I love
I feel like I need it.
I said I do it.
Huh?
I never said I love it.
Okay, fair enough. I would say
I do like to be healthy
fitness,
though, so they kind of go with each other, unfortunately.
All right, fair enough. Yeah, you do have to do it. It isn't always fun to be out there and physically fit, but yeah, it is. It definitely pays dividends. Yeah, I'm looking at my hash marks here. I put a hash mark down every time I do 15 push-ups. I have 0 hash marks today, so I have to
get some push-ups.
I have to jump on that after this. If I don't have energy after interviewing Joe LaFleur, then forget it. I'm just done. Just done. All right. How about this? We got to wrap it up. So usually I have a lightning round. I've got a little bit of a different set of questions for you. So let's just move it along. Real estate's a place where there's, some good advice, some bad advice. What would you say is the best real estate advice you have to give, or that you've ever heard?
That's really interesting. The best real estate advice I've ever heard, I'd say execute. A lot of people spend 9 years trying to evaluate something. Go do it. Take action. Whatever the next step is, take it.
Love it. Just do it. Just get out there. Yeah, you got the Nike on your golf shirts too, don't you? I don't know if you can stand up if you got one of your signature shirts on today, but love it. Yeah, just get out there, do it, make it happen. Woo, 100 units.
There's our 100 units logo right there on the golf shirt.
All right. So real estate's also full of a lot of dodgy advice. What would you say is the worst advice you've heard going around?
Ooh, worst advice? I don't know if there's any really terrible, and like most of it comes from a good place. I would say whatever is, I'll give you some bad advice. Here we go. You need to underwrite 70,000 deals and don't make any offers. I've met people, this is legit. I've met people at multiple events, year after year after year. Oh yeah, I'm underwriting this. I'm working on this. Oh, great. See him 2 years later, underwriting this. I'm like, did you buy it? Nope. Well, how many offers did you send? Oh, well, I'm trying to buy something next year. Hey, I said, how many offers did you send? Oh, I sent 1. I'm like, look, I see the problem.
Right. I love it. And as a statistician, I mean, just because you might have to underwrite 70 or 100 on average to get that one deal that is just totally the deal for you, who says it doesn't come in the first 10 or 20, right? Don't know.
Also, if you put all the time, energy, and effort into underwriting a deal to come up to the price that makes sense for you and what terms would make sense for you, well, why not spend the extra 30 seconds to ship the offer?
Right.
Like, you already invested an hour.
Low, right? At least you got some feedback there, right? Hey, this is where we're coming in at. Am I missing something? or even show your underwriting and say, hey, this is where we're at. This is what we're looking at. And who knows, maybe the broker will say, hey, this is what you're missing. I mean, there's, the great tailwinds. I mean, like, look, I mean, we had, I don't know, 10,000 people move in it last year or something, right?
Well,
Are you counting for that?
It's also feedback to you when you make the offer. If you don't make the offer, you get no feedback. The other thing I would definitely do is if you put all the time, energy to track the deal, to go through and underwrite and come up with your offer, and then you don't send it, you just sit on it, right? You need to go back and look 90 days later and see what that deal traded for. Because if your underwriting came in and said, oh, this deal should trade and it should be $4 million, and you see it sold for $6 million, you're wrong. Your underwriting is wrong. And I see people underwrite all these deals, then they never go back and look and see where they were at. But the marketplace dictates the price. And if you're constantly underwriting deals and they're constantly way below what they're selling for, that's market feedback to you.
Love it. Yeah, don't be shy. Get out there, make the offer, and then accept the feedback. All right, so how about this? I'll just ask you one last. We got to do something random in this interview. I don't think it's been exciting or random enough. So I got my random question cards. Just tell me when to stop cutting.
Cut. Let's go.
Okay. All right. I'm cutting. Tell me when to stop cutting.
Right now.
All right. Top question. Have you ever bought anything from a TV infomercial?
Oh, of course. Are you kidding me?
All right. You got to give us an example now. What do you got?
Carl Sheets. No money down. Are you joking?
Yes.
Of course I did.
Yes, I can't tell you how many people mentioned Carlton Sheets on this show. And I used to have
that dude a check for $200 or something, whenever it was. I forget.
Yeah, that's amazing. I used to hold that up because I bought the same thing, and I used to listen to Carlton Sheets. That guy is a legend, but I finally gave it away at one of my meetups, so I can't do that anymore. But yeah, Carlton Sheets. If you don't know who we're talking about, go out to YouTube, look back to the 1990s. And you will learn that guy, he was like the granddaddy of creative financing. And oh yeah, great guy, amazing. He knew how to talk to people. Well, Joe, you've been amazing. You've been very generous with your time. I just want to make sure that people know where to reach out to you. Obviously, you're at www.100units.com. Ta-da! And what is the best way to reach out to you?
Go to 100units.com. We're right there.
100units.com. Joe at 100 Units. All right. So thank you so much for your time. This has been literally amazing. Gold mine. If you listen through to the end, I swear you must have saved yourself at least $100,000 of headaches. Thank you, Joe.